Hey everyone, welcome back. So we are about one day away from Jerome Powell to come out and basically either tank the market or give a market a fake bull trap. Because trust me, we are not getting out of this market situation where we are or for a very long time. So in this video, I'm going to show you some expectations that we have from FOMC meeting tomorrow and what Jerome Powell is expected to do or expected to say and how the market is going to react. Along with that, we have few other things that I want to point out. Now, I would like you guys, because some of you are really smart. I mean, you guys write the comments, you guys talk about what the market expectation is or where we can see the market go, and it kind of makes complete sense. I want you to basically comment under in this video and tell us or tell the viewers and also myself as well, what is your expectation from FOMC meeting tomorrow? And also, where do you see Fed or the interest rate go from here? Do we expect a 75 basis point increase in June, July, September, all the way to the end of the year? Or do you think we are going to have a shock of maybe 100 basis point increase or 1% increase in June, and then also 50-50 for the next few meetings or next 3-4 meetings? So go ahead and give me your opinion. Now I'm going to share my opinion, what I feel that Fed is going to do tomorrow and what Jerome Powell is going to do tomorrow. I'm giving you quick 5 things that I think basically will define the market or how the market is going to behave tomorrow. Now, tomorrow at 2 p.m., if any of you have, not sure about the time, but tomorrow at 2 p.m. Eastern time, the minutes of the meeting will be released. And basically the meeting is going on today and tomorrow, but we are going to get that press conference where Jerome Powell is going to speak. And I think he's going to mention the word recession for the first time that he has been shying away from. He has to, because the inflation data that just came out doesn't make sense the way the data is right now. So let me share my screen quickly, and we are going to go ahead and talk about what I expect the Fed to come out and do. So right here, these are the 5 pointers, and I'm going to go one by one. Now, actually, let me just come on the camera as well. It's easy for me to express when I'm on the camera. So I know that you guys are looking at my face, otherwise I look funny talking. Okay, so FOMC will raise federal fund rate by 75 basis point. That's the expectation of Wall Street that has already been priced into the price movement that we saw towards the close yesterday. And I did a video yesterday where I said that, the Fed might have leaked or kind of give a hint to Wall Street to basically run the article because they really don't want to tank the market by coming out and saying something like this. And I still believe that. I think it was a on purpose kind of an article to alert the market towards the close that, hey, this is what we are already thinking when the market already has tanked. Because nobody's enjoying this. Trust me, President Biden, sorry about that. So President Biden is not enjoying it. I'm sure the analysts, the Wall Street, all the people, those who fund these campaigns, nobody is enjoying these market conditions. Everybody is hurting and everybody is going through the same thing as you and I are, of course, at a different level. So these are the things that I think FOMC is basically going to come out tomorrow, and they will raise the federal fund rate by 75 basis points. Now, Powell, my expectation is going to turn a lot more hawkish given the hot inflation reading. And the best part is that I think he's going to say that they are going to increase 75 basis point in June, another 75 basis point in July is on the table as well. If the July inflation or the June inflation comes hard, the CPI reading will come out in July for June. So the June CPI, which we are in right now, in my opinion, is going to be even hotter what we saw in May. So the May rating was 8.6. I think in June, we're going to break that record because energy prices really surged. Gasoline is hitting like $5 a gallon for regular, and then some states have like been $7 a gallon. So these things are running really hot right now. And I think we are going to see in the June number that comes out in July, and that's going to be a shock. But guess what? We didn't had this in May. In May, we were not thinking that the CPI is going to come hotter. Now everybody is thinking that CPI is going to come hotter for the June as compared to May. So some of the things that we were not expecting is now slowly starting to be built into the market. Now, of course, if CPI comes better, that's going to be even better if right for the market if CPI comes lower, but that's not happening. The expectation is that we're going to see the CPI come even hotter for June as compared to May. Now, as I said, the core will come down, but energy and food will take it up to the next level. Okay. Another one, the dot plot that they are going to reveal tomorrow, they're going to show the dot plot, will not reflect the recent development because, I mean, it was submitted weeks before. So I don't think we are going to get the latest development of the dot plot. So that might be old news. A lot has changed in last 1 week since the CPI came out for the market, for the economist, and also for many people, those who are thinking where the inflation is going to be, where the rate is going to be. That brings me to my next point. So the rate that we had before, expectation was that the federal fund rate by the quarter end would be about 4%. If Jerome Powell doesn't come out and give us the 75 basis point increase for June and maybe for July, we are not going to get here by Q3 of 2023. He's already, everybody's talking about how he is behind the curve. He is really going to be behind the curve. So the 75 basis point increase is kind of a set deal, in my opinion. I could be completely wrong. He could come out and say that, he's doing 50 basis point tomorrow. And then in July and September, they're going to do 100 basis point. I don't know. But from what I'm seeing right now, that we are basically quarter end of Q3, the interest rate would be around 4% right here, as you can see. And right now, if we were to follow the same, I would say the rate hike, the Fed will be way behind the curve. So I think they have no choice but to come out and be more hawkish and give us more numbers. Now, this is really tough, what I'm showing you here. So University of Michigan basically did the survey where they're talking about how people are thinking about long-term inflation from 5 to 10 years. 5 to 10 years now, 75th percentile folks are basically saying that inflation is going to remain above 5%. And they were talking about how in the next 2024, 2025, the inflation will come down to like 3% or something like that. That's not happening. And that's not good because this is really, really very hard for the companies, especially for the risky assets, to be able to be profitable, to be able to do well in these times. Because if inflation is high, above 5%, people are not going to spend money on, I'm going to call it like stupid stuff. They're not going to, companies, especially businesses, are not going to spend money on stupid stuff. See, when the money is easy and money is free in a way, is easy money, you're making a lot of money, people go out and spend money, right? They're like, okay, yeah, I need this system, I need this software, I need this to basically make their operations better or to make their companies, the future planning is like that, especially small businesses, especially like companies, those who really look at the balance sheet and want to be able to take right steps. And when inflation is expected to exceed 5% in the next 5 to 10 years, those are the businesses, those are the companies, those who think back and say, you know what, slow down. Because we just saw what happened with Coinbase, right? 18% of the workforce. These are all warnings that recession is on the table, cannot be avoided, no matter what anybody says. Now, I have read so many reports talking about how recession is not going to happen in 2022 because we have 6 months left in 2022. We'll be dealing with this. But 2023, there is a 50% chance of recession now from 30% before. So recession is coming. Recession in US is very hot topic right now, where everybody, the whole world is talking about it. So what's going to happen is that as we get into tomorrow's meeting, and when the Fed will come out and be more hawkish, and if Jerome Powell basically says the right things, saying that, we're going to do 75 basis point increase on this, sorry, I'm silent my phone, 75 basis point increase that we are going to do in June, 75 in July, and then we're going to do the 50 basis point for the remaining of the year. That's going to cheer the market. But here's the thing, the market will only cheer. It's going to be a bull trap. So don't fall for it. I'm going to do another video where I'm talking about how recession has fared in the last few years and how bull trap has formed during recession, where people thought, we are out, we are good, we are clear. But no, we are not. An average recession is about 11 months. And I won't be surprised that next month a study comes out and say US is already in recession from last 2 months. And because we saw GDP go down, we saw certain things go down. Companies are not hiring anymore. Tesla freezing hiring, Coinbase laying off staff, Tesla laying off staff. So those are the things, are early signs of what to come in the future when these giant companies, when they see, because see, they have so much data from their consumers. They have so much data. Like, think about it, right? Coinbase has so much data on how people are spending money, how much crypto they're buying, how much they're selling, how much cash they're holding in their account, that they're able to predict these things easier than you and I. We are just looking at the reports kind of did by somebody else, right? I don't have a data of my own to kind of share. I'm just looking at the reports and the data that's coming from other sources. But these companies have first-hand data, which is really, really key for us to find out that, okay, are we already in recession, or is it going to, get even a lot worse? Which, in my opinion, as I said in my previous video, that we could see S&P go down another 8 to 9%. And if we have a June CPI, which is going to be really hot, then I would say we don't know what Feds might come do and say that they want to do 100 basis point or 1% increase in the next meeting. So don't get caught into, that's how I'm like taking at this market. Don't get caught into this fake green days, because market is so uncertain, doesn't know where to go, and just try to save your cash as much as you can. I mean, on a beautiful green day, sell covered calls. Would love to do that, but not on a fake out green day. But and especially not on a day when a news like tomorrow is going to come, and maybe tomorrow they give us what market is expecting and has already priced in, and we see a huge green day followed by a red week next week. So I'm going to wait. I'm not playing any plays right now. We did some buy yesterday on one of the stock, and we will come out even with a 10 to 15% gain, because that's my goal now. These are all short-term trades. I'm not talking about buying Tesla or anything like that, which I buy and hold for a very long time. So I hope I provided some value. And if you like the video, then definitely give it a like button and also subscribe to the channel. And also, I'm going to actually in process of doing a research on the recession video, which is going to be really, really cool. So if you like topics like that, then definitely subscribe and also share the video with your friends and family, those who are into stock market and those who are looking to get more information. Thank you so much for joining. Until next time, you all have a sparkling day.